Hi there, my name is Karen Jones, Content Editor for the Society of Technical Analysts. I'm just going to have a quick update on the US versus the Japanese yen, which saw a huge surge higher on Friday. It's into fresh 34-year highs. It was bolstered in part by US inflation data that showed no signs of easing and coming in line with forecasts and affirming expectations that the Fed Reserve will likely delay cutting interest rates until later this year. So what are we looking at near term? Well, we've broken, this is a daily chart. What we've done is we've broken above this huge pivot line. So let me just show you how well this pivot line has been working. So you've see it held a number of lows up until this point, and then it broke and then started acting as resistance. But on Friday, we actually surged above it. So that looks pretty directional. Yes, we seem to be insanely overbought very near term, but I'm going to be talking about the longer term direction for the dollar versus the yen. And for that, I'm going to have to look at a 1 year chart. So this is a really long-term chart. Each bar is 1 year of data. Now, I hope you can see this. This is a very long-term base underneath the market. It goes from approximately, say, 130 down to around a low of 75-ish. Let's call it 55 points from the top to the bottom. If you take that from point of breakout around 120, 121, that's going to give us a long-term upside target nearer to 75, 76. Now that's quite interesting. Very near-term target is going to be this high over here, the 1990 high at 160.40. Beyond that, we do have a Fibonacci retracement at 164.20. But that ultimate target coming from that base around this 174, 175, 176 area ties in very nicely with the 50% retracement seen here, which comes from the high we saw in 82 down to the low that we saw back in 2011. Now that comes in at 177.10, and that I would make my long-term target.